Hey guys, how's it going? Happy Fridays. It's MC Fire, and we're going to be taking a look at our in place setups for December the 13th at the end of the week, and kind of go over end of the week really strong and what all happened, and just get an opportunity to chitter chat with you guys. So we'll start out with our in plays. Or actually, we'll start out with the overall market, and then we'll jump to some of the setups on the day. So we have SPY here, but has since after hours relative um, relative strength shown in after hours. There was a little bit of a sell off yesterday during regular trading, but today is currently kind of outdoing itself to the upside. So we'll see what all happens there. The Q's showing a lot more relative strength in that regards as well, with a pullback. This being the 10 minute and the 2 minute, so going into the morning here, pre-market, kind of breaking its previous pivot high. So looking pretty good. And if you look back, we have been in that buy since back here, the 11-18. So a couple rolls in play. We recently had to roll for time as well as position, so that's kind of good. Taking a little bit more off the table, but really kind of evening out on the debit there because of time. We're buying for time, and essentially, what is the new plan? Well, the plan is to make a new decision at 3 ATR, looking for about a 1-to-1 there on the push before you take profits. It is not exactly in the strike zone, but keeping with our mentors, we want to keep in the uptrend. And with this environment currently, with them cutting rates and momentum, getting more momentum, and going into the first quarter, you could see a little bit more push to the upside. So it's not completely unreasonable that the market does this. If you look historically, the market could at least, sorry, excuse me, the market could at least get up to 3 ATR. My bad, guys. It's about 6 o'clock here on the West Coast, so we get up here early at around 4:30 to try to start our day and see what's going on. We've got so that's your SPY and your Qs update. Let's start going down the list here. Nothing too outlandish. There was a very clear Adobe setup here. Setup candle, but not a big opportunity for you to get into that play. This is an earnings play, and post earnings, if we take a look at the unless you were trading after hours, there was no opportunity for you to scoop this up. Massive selling. So this is your setup here. Push to high. Once it broke the low, that was your cue to get in, and then it would have washed. A lot of very just strong push to the downside. I mean, what can I say? We got up to as high as 569, and when it opened, we're talking about an opening of 485. So, massive move to the downside on Adobe. The cool thing is the system would have told you, this kind of stuff happens, and there's ways to put in protections against stuff like this from happening to you. The way we set up our verticals, we have protection for stuff like this. The market can do stuff like this, but this shouldn't be a surprise because Adobe, number one, likes to gap, and you can see that here. Likes to gap. It likes to take these massive gaps. So it is one of those stocks that's on gap alert. So you got to be keep that in mind. Number one. Number two, you're biased. Not really a biased. Your established setup should be probably to the downside, right? It's been in a downtrend for a minute, so at least in September. And so anything that's a rip into there should have been potentially a play to the downside. So you see one setup here that gives you a nice juicy trigger, and the following day follow through for some very nice profits. Also, this one would have been the same thing, but the only difference is here you get regular trading hours opportunity to take the play to the downside, and this one you do not. Still the same setup, still the same play, as well as this one, same deal. AVGO. So we'll go take a look at AVGO. A little bit of a pullback yesterday, being Thursday, for the earnings. We'll see if it has not since rallied. We'll take a look. Let's go ahead and scan that. Scan for there. Yep, it has since rallied post earnings. So that's kind of what we were looking and hoping for, the post earnings. Really good. We still are in AVGO. Has been in AVGO since here. So 11:22, and the setup, as we kind of talked about in our midweek movers, there was a setup candle in play for AVGO even up here. So after it breaks that, even post earnings, but you had the indication to get in back here. So absolutely good look there, and us keeping to our system set up. We're taking profits, and then as it gets too high, it's probably at the open. We can take a look at this at the open. Breaking highs probably take some off the table there and roll it up at open, which will be in approximately 25 or so minutes. So if we can stay up there, that'll probably be the first thing we do, is lock in some profits for AVGO. So shout out to us on that one. You got EA, another one that's been kind of on the watch list there. We'll zoom out a little bit for you guys. But there is a setup candle in EA, even though it is in a stratosphere. Moving averages are a little wide. So typically we want to be a buyer here when moving averages are compressed. Compressed moving averages combined with a setup candle breed massive results. So it's essentially a combination of the squeeze and our setup candle being in play. Truly, I believe here, not too many people watch the channel, but it's fine. Real alpha has been accomplished, right? So one thing that I noticed with, and shout out to Johnny Carter, part of identifying a squeeze and seeing in the break is the momentum has already started. Whereas there is hidden indication within the squeeze. So let's say we can actually, let me do that. I will throw a squeeze up for you, so you guys know what I'm talking about. We'll put in a TTM squeeze. I'll throw it in there. Boom. Okay. That's fine. We'll supply. It's awesome. Very, very nice. So squeeze. Obviously, there's a squeeze right here. What is a squeeze? A squeeze is typically defined by your Keltner channels. Your Keltner channels are essentially a stochastic indicator that is letting you know that the market is rotating within one average true range. You can set up your Keltner channels to be, based off an average true range of like 1, 2, or 3. So if you set up a Keltner channel, maybe we could set that up. I think we have a Keltner channel indicator here. Let's see. We'll throw that on. I think it's set to 1. Cool, factor of 1, link 20. Okay, that's fine. We'll keep that for the weekly there, and we'll apply it. So you guys are going to see this in real time. So a Keltner channel, when your Bollinger Bands pull into your Keltner channel, that's another indicator, but we won't pull that up. It's essentially Bollinger Bands show volatility, right? They're like they expand during higher volatility and they contract during lower volatility. When the Bollinger Bands pull inside the Keltner channel, then his indicator here would throw these red dots, which indicates a squeeze. The squeeze, typically markets don't stay neutral, narrow, right? But when they are neutral or narrow, they become like a compressed. If you've ever squeezed like a slinky, what's it gonna do after you kind of squeeze it? It's gonna pop back out, or really just kind of store of tight energy for the market. That's how I see it and kind of define it. So with this squeeze that happens here, right, there is an indication that, hey, all these days, right, you could say, okay, there's a squeeze in play for this 2 weeks. The reality is, when is the squeeze actually going to fire, right? And still, you're still in the squeeze. So his play would indicate a move the following week, this week. So we can put a candle when the squeeze actually fired, the week that it actually tells you, hey, this is the play that you get in, right? Boom. So we'll put it there, right? This is where that candle, we'll mark it yellow here, just for example's sake. This is where the indication for the squeeze, which is a very good setup based off fundamentals, is telling you. Now you could narrow it down to the daily chart and take the daily trigger, obviously, but we're looking on the weekly chart, right? So you get a 2 week squeeze, which is nice. But then within the squeeze, you see that we have on the daily chart a very clear indication in the last 2 weeks on when to actually take our setup on the day it actually post earnings in the move. So it's really clean, really crisp using our setup. Even down here, when you don't get the squeeze on the weekly, as it's coming down and momentum is slowing, indicated by the darkening histogram here. Momentum is slowing it, and it going into the squeeze, and then it fires. But it fires by the time the week print fires, it's all the way up here, and you will have missed a lot of momentum. So if you're just tracking it from the weekly, you almost have to be tracking it from the weekly and the daily. We'll pull that up just for you guys to see, because we want to give an honest look. But in reality, did it? Okay, okay, cool. You don't have to really change these settings too much, right? So you see here, multiple day squeeze, several days of squeeze, and then your fire. Even your fire is here. So your fire on the daily will have printed after kind of the move is already kind of pushed. So the fire has to happen as it comes into this compressed zone here from here to here. It's forming that multi-day squeeze, and then as it pushes out, the move has already happened. Essentially, you would have got in the next day, probably up here. So it's still slight alpha with our setup, because if it breaks this high, you're already into the position, slightly ahead of the squeeze firing. It is nuanced, but to me, we want to be as skilled or professionals as we can. And so just keeping that in mind to know that, hey, your setup is pretty spot on, and it has some alpha to the big boys. This squeeze is flagship for Simpler, and I learned a lot of what I know from a combination of Simpler trading. So shout out to them, and shout out to what John Carter has built over there. I got to give credit, because you stand on the shoulders of giants, so to speak. But we'll go ahead and hide the squeeze. We don't necessarily take triggers from the squeeze, but it is in line, lockstep with essentially making things over here as easy as possible, and using what we know and applying new alpha and new strategies, right? Things that have been proven in the market to work. So that's your kind of brief lesson on EA with this very nice juicy play. We actually, I believe, shouted this out to you, but again, not necessarily looking to scale into everything, but we have what we have, and we're going to keep you guys abreast on developments that are out there. We do have LMT kind of throwing setup candles yesterday for sure, but kind of different setup candles, right? We have a negative ATR or -3 ATR, so this kind of where you get into a buy bias zone at -3 ATR, and this is Lockheed Martin defense sector. So defense sector is, I guess, expecting to take a hit. We did take a buy off the rip there, um, or off the dip there, and then roll it for Lockheed Martin, but I have since let it go due to the trend change. So something to keep in note that there is a setup there at 3 ATR. So anyone looking to have a buy bias, you would want to see a cross above the 501 dollar mark and 3 cents. So just watch that for Lockheed Martin. You also have Nicor here, same thing. Massive trend change for Nicor. Kind of trend change to the upside, then to the downside almost immediately. But there was a couple of days where it just very sustained, very, very powerful selling pressure. Going into this, though, we did have a juicy play on the core to the downside, actually using our setup to kind of get out of the way of this potential rip against against our position. So letting that go at a decent time to save some profits there, and then throwing a setup the next day, taking the sell, and it would have. We didn't take this one, but it did end up following through very nasty. So setup working really good, right? Find downtrend. You take the setup here and it follows through. Awesome. You would have took it again, would have fell through for a couple base hits slash doubles. In VTS, you're seeing kind of the same thing, but here it's a little different. The rip happens. We do have a buy bias, and why do we have a buy bias? Well, we're at like all-time lows, and pinging off 3 ATR. So it'd be interesting to see what's the short interest here. Something I don't like though, you did have a advance in the unbalanced volume, but the reality is right now it's currently in an uptrend. So we would be looking to be a little bit more patient. We're not underwater on this one, but we're looking to see if it does start respecting, if buyers do step back in essentially, and we get a setup candle break. So we'll be watching that. PGR Progressive, really nasty work from Progressive as of yesterday and really the week. So the pre-market test of Progressive this morning, kind of testing that high level. Kind of interested to see, where it is now. I think it's since pullback from those highs relatively. So it was a 45 here. So it's saying ask is 247 and bid is 245. So ask is kind of right at our level and bid is down here. So a little wide, but of course this is pre-market. So we got about 15 more minutes for the market actually does go ahead and let us play. But this play right here, if we can see a break, Progressive is an uptrend, and this kind of holds to the support level down here. With it coming down here, we'll go ahead and mark that out for you guys from the pivot about couple weeks ago. Put that right here. Right, and so there's your pivot. We also, just to mark the other ones for you so you can see the rotation. Boom. And then all-time highs. Boom. Right, and we'll mark that red as we like to do. Just make a system that just is streamlined, simple, and optically nice, right? Not too much stuff on the charts. So definitely a lot of selling pressure here. And if we can see some reversal against, especially against these two, you can almost put one and two. If it breaks both, then I would feel okay with buying in an uptrend off this nice juicy dip. This is kind of what you want to see. Some selling pressure into resistance with unbalanced volume being green and a setup there. You can catch a nice double, triple, targeting like a pivot level or even first sign of danger. First sign of danger here, though, would be this rotational zone. So this is kind of where if we get an entry, stop out at the low, rotational zone there. You also have Uber. Very similar to some of the ones we've looked at before. Massive selling recently, a new downtrend as of a couple weeks ago. So if not really throwing a major setup candle for you to kind of execute, but the reality is with more traditional setups, you could take this position to the downside from the retest. So it breaks and then comes back up, retest while it's negative, kind of in these 3 or 4 days or so. And then it does end up following through. You can see declining unbalanced volume. So Uber kind of suffering there, but what could we hypothetically see? Well, if it gets down to here, this is kind of where you're looking for a more juicy setup. So you could say, okay, well, Uber might be selling off, but buyers did rally at this 54.93 level. So that's kind of where you could say, well, they could do that again. And Uber is a pretty juicy big company. So definitely wouldn't mind having a buy bias, especially if it gets down to 3 ATR and support. those those confluences would be really nice, right? I meant to do a level. There we go. Nice. Well, but when you know what they say, when given limits, so we'll do that. We'll just put that there for the sake of continuity sake. There we go. Boom, boom. Nice. But yeah, there's your Uber. You got UNH in play for sure for UNH a couple days ago, 3 days ago to be exact. So there was a setup here, and you could have took this rip to the downside. Very very clear setup too. It's not like it was kind of hard to figure out. A new trend change, relatively new trend change off the push, and then there was a pullback in the upper. Like if you could take this pivot high and this pivot low, pull back in the upper third. Very prime setup right here. Testing the 8 pair moving average. Very prime setup to the downside. Now you would have got the indication, boom, to take that setup. Very clean, right? Unbalanced volume, moving below the moving average. So all indications, all systems to the downside here. Unfortunately, the CEO was deleted, so to speak, and that's been all over financial news. So the company definitely reeling from that loss, and it's definitely affecting the bottom line. So we'll be interested to see what news that United Health has as regards to what they're going to do to turn this around. But heartfelt condolences to the CEO's family. Also, we have WBD. So Warner Brother, right? Setup candle here. Opportunity to get in at the open for the nice rib. Would have moved about $1 in your favor. But was there an opportunity to get in before then? Well, let's go take a peek. We did shout out WBD here. Kind of throwing a setup candle and then executing it in, and then you probably would have got stopped out on the move down here. So one stop out there, but the next play that would have been available was early indication of a setup potentially forming. Then the setup forms, triggering break of high. Now this is earnings, so it's not in open waters, but seeing this and this would have gave me indication. Okay, it crossed above, didn't fill the gap. It could be a gap and go, and it does actually do that. So after seeing this for a little bit, you kind of, there is some nuance to it, and you understand that gaps have a tendency to fill. So if it opens here, halfway fills or full fills, and it does move halfway. But then the secondary setup probably would have gave me an indication that it halfway fills, and then you break above high, stop out at the low, or even just keep it, stop out at the low here. And if you took this position, which probably wouldn't have took it, I don't like to be a chaser, but this one is definitely a good look for the absolute upside. So shout out to Warner Brothers. Yeah, that's what we have for the setup. So let's go see if there's anything. I haven't looked at these. I've just looked at the setup, the end plays. So let's go look at if we have any on the bear. Yep, AVG obviously would be here, especially with the pre-market move in AVGO. I think post and pre-market. Yeah, post and pre-market, absolute massive gains for AVGO, and the premium should be pretty high as well. And then the core makes sense. XLE makes sense because XCOM is weighing it down. We've been talking about that a little bit. So in the core, in negative territory, kind of giving a blowout candle. Blowout candle is defined as if we're in a downtrend, and then as it expands away from its moving averages, a good distance, about halfway to the anywhere from halfway to all the way to the 3 ATR. If you start getting candles in the direction of the trend, right, already far away from the moving average. Typically, we want to be a buyer close to the moving average and be a seller away. So it kind of corresponds the same way. It's going to give you an indication that some sellers might have got in a little late, and this could be the exhaustion candle, so to speak, of that move. So we just call that a blowout candle. The candle is exhausted, and you're gonna blow out the heat's gone. It's just that's what we call it over here. Um, so the core, just something to watch. If it could, and but it also could represent, sustained confirmation of momentum in the play, right? So it's still either way, it's a good idea to make a decision. And when we say make a decision, most of the time that includes rolling it. Now, why does it make sense to roll it here? Because you would have taken profits out of the table if it's an exhaustion or momentum. If it's a momentum, you made a decision and the play continues in your favor off the roll, giving you more profits. So shout out to you. And if it is a blowout candle, you would have took some profits off the table, right? Reduced your risk, stayed in the play, waited for the if it comes back, maybe pulls it back above this level, then I get to make a decision and get out of the play. We did that for one of these over here. I think Lucky Martin or Nakor. Yeah, Nakor is perfect example. Perfect example of that. Perfect example. So you see the setup candle here. It fails, right? Took the fail into earnings, right? But then this being the blowout candle. So if we zoom in here on the weekly, right, we saw that it pulled up in the wave and it started expanding outside of the wave. So essentially, um, it moved out of the moving average cloud and is pushing to the downside. So we were like, okay, with this blowout candle, massive moves to the downside, especially during earnings, it makes sense to take some off the table. Premiums are advantageous, right? Big move to the downside. And then if it goes against us, goes against our setup here, then we just go ahead and close it out. And if it throws another setup, we have the opportunity to get back in. And it works out, right? If we rolled here, there is no additional follow through, not really, to the downside. Most of the theta is going to destroy any profits that you have anyway, because it's post earnings. So you get a vol crush as well as it just treading water. So getting out is pretty advantageous, and you see that the blowout candle system also is in effect, and you can use that with our system. That is good. You get that here. So that was a negative side. So we'll decor doing that. XLE. Let's see here. XLE. So yeah, XCOM. We'll go take a peek at that really quick. So boom. Right. Kind of the charts are looking very similar. XCOM is the number one weighted in the XLE, and if it takes a hit, more than likely the market's going to take a hit. It is playing with your setup, but again, this is a negative territory, so we'll go ahead and get rid of that. Is it a 3 ATR? It is not, so very interesting. Before the trend change, we put the alert to see if it'll take the buy. So now it's since trend changed, and there's no need because we're waiting for it to rally so we can short that rip, baby. We also have SYM. We'll touch on that briefly. Did put a butterfly in for SYM because of the setup here. When you see like massive stuff like this, it doesn't necessarily mean just because it's a buy, but I mean this is very pronounced, very pronounced selling. So potentially for the gap fill maybe, but not looking to hold my breath for this play to work out, right? Everything is trending downwards. So you have the downwards trend in the 21 period moving average. Balance volume is a little shaky. And post earnings, you had this like massive, kaput. So, in open water, this massive kaput is not necessarily a good look. But if there is some follow through, we could see that on SYM. Give us some juicy profits. So really the highlight of the week is the Qs and AVGO. We'll take a look at that. As it has since the roll pushed above this zone, above this 167 in pre-market. It is up to the bid and ask, the 212. So it is up there. It's saying it's up like up here. I don't know if that is still current or what's the deal. Yeah, it got up to 216. So it's at 212. So shout out to it. But yeah, massive position coming. soon for us if it can hold that in the next 2 minutes. So thank you guys so very much. We appreciate your time, and you guys keep trading, keep learning, keep growing. And we'll talk maybe later about some books that we can read to get some knowledge, or some guys that I think would be good to watch. There's so much free content out there, but you always should be a student. Even I right now uh, love to be a student in trading. So it's just something to keep in mind. Always be a student at your craft, and hit your goals. So, guys, thank you so very much. You guys have a wonderful day, and goodbye.